All right, ladies and gentlemen, we are back to real estate investing with Alex Deacon. And I guess we're going to put this under the property management series as well, right? Are we going to kind of double dip on this one?
This could be... Nah, this is probably more of the investment side.
On the investment side. So this is going to be real estate investing. And what I subtly did there was plug both of your shows. So, see?
You did it so smoothly, too.
I'm a step ahead of the game. Always ahead of the curve, like Joker says. But while I'm already plugging part of his shows, let's plug everything else that we do here at Deacon Hoover Real Estate Advisors and MACE Property Management before we start this show. Along with Alex's two podcasts, we have the Realtor Nation featuring Ian Hoover, where Ian sits down with other real estate professionals and entrepreneurs. They have very, very, very intriguing conversations about how to be successful, the path to success, and those are must listens. Much like a lot of yours, Mr. Deacon. And now we're at episode 95, and you can find all 95 of these episodes on Apple Podcasts, Google Play Podcasts, Stitcher, Spreaker, Anchor. I believe we are on, like I said, Spotify now because people love Spotify. And we're YouTube, and we're growing and growing and growing. Find us on all your major social media platforms at Deacon Hoover. And our website is dhrea.com. Search our listings there. Search our advisors there. Search anything you want. Get in touch with us. And you can always get in touch with Alex at alexdeacon.com or pittsburghpropertymanagement.com. That's for MACE Property Management. So, Mr. Deacon.
Wow.
Now that that's out of the way.
Yeah, let's talk turnkey.
Now that my use car salesman voice is out of the way, we're going to talk turnkey property investments today. And some of the dangers to watch out for, I believe, correct?
Mm-hmm. Yeah, the advantages, disadvantages, indicators that and the due diligence that you need to look for before moving forward with a turnkey property investment provider. Right? I do this. I do provide turnkey. I don't market it. It's not a strategy that I use, and it's my day-to-day how I make my living, and nor do I spend the time to focus to attract buyers, therefore, find product for them. I don't do this on a regular basis. I've done tons of them.
Right.
But just kind of out of happenstance,
okay.
Not out of a business model. But I see it's a common term now. It's thrown around like
anything else,
like any other common new term, and it's kind of scary because turnkey. You think as a consumer that means no risk, no worries. I just open up my wallet, go get a loan, whatever the case may be, buy the property, and it's all handled for me. Could be nothing further from the truth. Okay? Until you've built that relationship with that turnkey provider and you know that they've proven themselves, you're never going to really feel that way. Nor should you. You should always have some distrust in whoever you're doing your business with. Right?
Correct.
You can't just trust 100%. There has to be some distrust that keeps them honest and it keeps you on your toes.
Mm-hmm.
So there's some of the things that I'd look for, because I've seen literally 100 times more not good turnkey providers than I have good ones. 100 times more. Okay? One gentleman who was providing this in this area and was doing it on a massive scale ended up in prison.
Wow, really?
That's how bad it was. Okay?
Holy cow.
I won't get into names or what he was doing,
yeah.
but we're talking hundreds and hundreds of people that got scammed out of hundreds and hundreds of thousands of dollars. Some of them was their life savings, and because they didn't do their due diligence. All they were, why they made the mistake?
Where did the mistake fall in?
Because they were greedy.
Right?
They were greedy and they were lazy.
Mm-hmm.
And I've been greedy and lazy many times in my life.
Mm-hmm.
And 9 times out of 10, when you're greedy and lazy,
you fail.
You're screwed.
Yep.
Okay? There's no easy way. So if it sounds too good to be true, it is. So I'm doing this podcast to help the person looking for a turnkey property in Pittsburgh or anywhere that they need to do their due diligence first. If it sounds too good to be true and it's too easy, you're making a mistake. You need to reevaluate and trace your steps. Right? Okay. So the one thing to look for is, and you're going to have to do this research on your own, it's knowing the market value of the property. So, for example, if you're buying something in a certain area and you go on Zillow, at least get a general idea what that property's worth. A Zestimate or Zillow is not going to be super accurate. It can be way off, as a matter of fact. So you have to do your due diligence on value.
Now, is this where you would look at homes around where you're looking at and see what the property value is?
Yes. Okay, so let's look at comparable sales. A comparable sale, this is how an appraiser would look at it, who's licensed to do appraisals. They look at a house that's apples to apples, right? Mm-hmm. So the best property would be the house next door, which is built at the same time, it's the same layout. Easy, right? Easy comparable sale. That one sold for $100. This one, based on the pictures of that one, because it was listed on a multi-list, there's lots of pictures of room size, based off of everything. It's very similar on the same street, sold within a year, perfect comparable. Okay. The next best comparable with any house that's sold on that street that's similar. You're not going to compare a 1,000 square foot ranch to a 3,000 square foot 2.5 story.
Correct, right.
Okay. Then you're looking at, if you can't find something on that street, now you're looking at similar houses, similar ranch homes that have sold within a quarter mile of there within the past couple years. Okay. Appraisers their kind of hands are tied because they have to use a sale that took place in the past year. And I've gotten screwed twice this week on appraisals, on flips that I've done, because the appraisers don't understand the market.
Gotcha. And
their hands are tied, or they're very conservative. It's cost me $20,000. Period. Wow. Just like that, right? Wow. So you want to get into flipping homes? Okay, we'll have fun, because your profit of $30,000 just got smashed into $15,000 just because an appraiser.
Ooh.
So,
and that's out of your hands. There's nothing you can do.
Completely out of my hands. There's nothing I can do about it. Nothing. You can try to fight it, but I've tried, and it's an uphill battle. You might as well just either resell it. That's a whole
different podcast. Yeah.
Okay, so how do you come up with values? That's one way. You got to compare apples to apples within a quarter mile or very close. Got to be within the same school district. You can be within a quarter mile, but a completely different school district, and that's totally different values. Completely different. So you're going to ask me, well, how do I come up with value? You're going to have to learn it. You're going to have to spend time online. You're going to have to get to know the area. There's no easy way. So if you're lazy and greedy, this is not for you,
right?
Because you're going to have to get to know the value, right? Well, why can't I just hire an appraiser? You can, but appraisals are opinions. Mm-hmm. Yeah, I've had house appraised 2 or 3 different times, and you might get a $600,000 appraisal, $450,000. It can vary widely. So you have to get to know the area. Then you need to know what the market rents are. So most turnkey providers will give you higher rents than what the actual market will bear. Well, there's a tenant in there now, Alex, for $1,000 a month. Okay, but I'm telling you that it's only going to rent for $900. I'm telling you that because I know the market. Well, how come they got $1,000? I don't know. Maybe they picked the first person who filled out an application, right? Maybe these people don't even have a job. Maybe it took them 6 months to rent it. Mm-hmm. So do you want to get an extra $100 a month, but take 6 months to rent it? What does that cost you? That costs you $6,000 in rent, doesn't it?
Right.
Or $900 a month times 6 is $5,400. You could have had it rented in 2 months for $900, or 6 months for $1,000. You do the math, you're going to better off renting it.
Plus, there's other fees attached onto that too, right? If it was a
yeah, but it's we're talking about we're talking about simple math.
Yep.
Right. So there's one thing you need to look for. Well, how it's rented for $1,000 now. Well, how long's the tenant been in there? 2 months, 1 month. That scares me. Mm-hmm. Right. Oh, the tenant's been in there for 8 months. Okay, show me that they've paid on time every month. Right. Okay. Oh, I can't show you that. Well, then I don't want to buy from you.
Right.
Because why can't you go to your property management software and show me when they paid the rent every month? Okay? These are the questions that are hard, that you don't think about, that you don't want to ask. Because I wouldn't either. I'm kind of lazy and greedy too. I just want turnkey. I went to turnkey.com or whatever. I want to buy properties and be lazy and greedy.com. And that's what I want to be. Okay? And I'm telling you, you need to do more than that. So make sure that the market rent is accurate. Because I have properties that some months or some years they'll rent for $1,000, some years they're $900, some years they're $1,100. Now, yes, rents are going up steadily every year just because it's called inflation, and it's going up. So are rents. But your rents can drop drastically, and for you to be married to, I want $1,100 a month rent, or I'm not going to rent it, then be married to losing money too, because you need to be flexible. You can't be rigid in this business. You need to know when you can fight a battle, when you can't. You know when to raise rents, when you shouldn't. And it's a fine line between sometimes those little decisions, which if you don't have the good advisors on your side, those little decisions can make your business venture highly unprofitable or highly profitable.
And especially if you're investing in an area you're not as familiar with.
So these turnkey guys, they're going to overinflate what the rents are. They're going to overinflate how easy it is to find a good tenant. They're going to over-exaggerate on how good the area is. They're going to promise you it's an up-and-coming area because they're building a movie theater down on the main street where there used to be a steel mill. You know what? I've seen a multi-billion-dollar shopping plaza. It's called the Waterfront.
Yes.
Homestead.
Mm-hmm.
That happened 20 years ago.
Yeah.
Nothing happened in Homestead for 20 years. It's starting to get a twinkle of, ooh, this might be the next hotspot. I'm still not sold on it, but it could be, because I don't have a crystal ball. If I did, I'd be super wealthy right now.
Yeah, right.
I've made a lot of mistakes and missed a lot of opportunities. But 20 years ago, that multi-billion-dollar shopping extravaganza went on down there. Restaurants, shopping, movie theaters, hotels, apartments, everything. On the other side of the street, walking distance, 10-minute walk, nothing happened.
That's true.
Yeah. So up and coming doesn't mean shit to me, right? Up and coming just means there's potential, but there's potential in every area.
Right.
So again, this is not the turnkey guy's fault. They're just trying to make a buck.
Mm-hmm.
It kind of is their fault because they're supposed to be. They should tell you the pros and cons. It could be up and coming because we have a $200 million new shopping plaza going on here, but it also could take 20 years for it to. Now that's the kind of turnkey person I want to sell me something, because they're going to give me this is what could happen and this is what may happen, and you might be right somewhere in the middle.
Right.
Not it's all rosy and it's always going to work and it's always going to be profitable. Shy away from those guys. And okay, so the next thing you want to do is, if you're going to buy from someone, you buy one. You buy one and see how it goes. If they try to tell you that, well, I got 10 in the pipeline right now, they won't be here next month, what does that mean? Does that mean, turnkey provider guy, that you only have 10 properties that you're going to sell this year? No, that means next year you're going to have 10.
Mm-hmm.
Okay? So take your time. Buy one. Let them prove themselves. Then buy another one. Let them prove themselves. Because what I see is these guys, they'll sell you one, sell you a good one, and then it'll work for a short time, and then it'll start, you'll see all the holes. All the holes will start after about a year and a half. The tenant stops paying. All these repairs start to come to fruition. You don't realize that the sewer line was compromised, and that sewer line could be $10,000. So that $200 that you made every month for the first year just got wiped out for the next 5 years because you have a sewer line that needs replaced.
Right.
Okay?
Right.
So the short term, it could work out. So you're like, 6 months, I've been collecting $200 a month. Boom, let's buy 6. And then guess what happens? 6 $10,000 repairs happen on each property for the next 5 years. And your profit of 200 times 5 would be $1,000 a month, or whatever, $1,200 a month. If you bought 6 properties, it dropped to a loss of $2,000 a month. That's that, but maybe exaggerating, but that's what can happen if you move too quickly. So let those turnkey providers prove themselves. And here's the other thing I would do: when you ask a question, you get an answer like, "Oh, what's your vacancy rate? How much do you think this would rent for? What do you think about this area?" Blah blah blah. Write these answers down. Then a month later, when you're talking to them again, ask them the same questions. If you get a different answer, and the answer is like way off, you just caught them in a lie.
Yep.
Okay? You might want to do that 2 or 3 times while you're interviewing them and working with them. Oh, that's funny because last month you don't have to say this to them, but you're thinking in your head, well, last month their vacancy rate was 4. This month it's 6. Or this month it's 8. He felt that, or he or she felt that we could rent this for $1,000. Now this month it's $1,200. Nothing changes that drastically in a month or 2.
Mm-hmm.
So there are probably some good turnkey providers out there. I have not met one. Okay? And I think the ones that I've provided have been far and above better performing than most. And I could get testimonials and give phone numbers of those people. And that's maybe another thing too, is get a testimonial and phone number of maybe 10 of their clients of 2 years or more. You don't want to get a client that's all happy with them and they're all snuggly and huggy, kissy now because they've been doing business for a month. Talk to their clients that have been doing business for 2 years and get 5 or 10 of those clients and you call them. Why not? If you got something to hide, Mr. Turnkey guy, then I don't want to do business with you. Give me those clients. I want to know who they are.
It's just almost like doing a background check on a tenant.
Absolutely.
Mm-hmm.
It'd be amazing how people will open up their wallets to and some of these guys, they have millions of dollars and they're getting taken to the cleaners because they just get greedy and lazy.
Buy.
Yep. So there you go.
So you got to do and this is important because there is a lot of out-of-state investing or even in-state local investing. If someone's first getting into it, you want to get that first one under your belt. You know what I mean? Because everything, a lot of times you got to get your feet wet. Sometimes even if you slip. But this is a great background into things that you need to watch out for. Because again, whether you're experienced or inexperienced, this can happen to you.
Exactly. Yes, and you take it slow. Just slow down because the real estate's always going to be there. You always want to be in the market. You don't want to try to time the market and not be in the market. And I've been listening to some podcasts on stocks and things like that, which I don't know nothing about, but I've done nothing about stocks. But Warren Buffett, who's like the guru of stocks apparently, right? He says you always have to be in the market. You basically put your money in and stand there.
You got to ride it out, yeah.
That's it.
Yep.
Because over the past 70 years, something like that, it's been like 7 to 12% or something. Here's an S&P thing, it's been a lot higher. But just by having your money in there, even through the crashes and the highs and lows, it's been 7 to 12%. Let's just say it's been 8%.
Right.
If you try to time the market and hit the market at the perfect time, you end up losing money.
Right.
Yeah, because your money's just sitting there idly on the sidelines waiting for that perfect time.
Right.
Meantime, that $100,000 could be getting 8% is just sitting idly next to you.
Yeah, and the longer you sit on the mattress.
Yep. Yeah, so it's the same with real estate. When's the time to get in? Now.
Oh, yep.
Yeah, now you just have to ramp it up when the stock market crashes.
Mm-hmm.
I presume you want to be buying as much stock as possible.
Right.
Same thing with the real estate business. I'm waiting for the market to crash.
Mm-hmm.
I'm trying to get myself positioned so I have much liquidity and positive cash flow now. So when it does crash, I'm financeable and the deals will be there.
And we've done a podcast about that too,
Yeah.
on setting yourself up just in case of a crash.
And I'm waiting for it. So I'm still trying to position myself so the banks look at me like no risk.
Right.
Because remember, when the market crashes, the banks also are going to they're going to take a step back and say, whoa, we need to be careful.
Right.
So we're not going to lend to just everybody. We're going to lend to the guys with a track record, who have positive cash flow, who have good tax returns, or showing income, good credit scores, all that stuff.
Right.
So that's super, super important.
It all ties in.
Yep.
It all ties in.
So I'm sure this is going to help a lot of people. At least it's not like a step-by-step how to buy turnkey, but it's going to open up their eyes on what due diligence they need to do and
the dangers that are out there.
Yeah, at least the dangers. And you can email me, alex@alexdeacon.com, if you need help with this. there's only so many hours in the day, so I try to get to as many emails as I can. But if you need help, I'm always open for an email.
There you go. So if you need to email the man, it's alex@alexdeacon.com, and he will, and he does get back to as many people as he can. He's great about
I
that.
absolutely try to. And then if not, you can go to the websites and listen to the podcast. A lot of the information you have that you have questions about are answered in these podcasts.
Yep.
So.
And in fact, while you're looking at our website at dhrea.com, all of our podcasts are listed on there too under the basically the free learning tab. So forgot to mention that at the beginning, and you can check us out there. Alex.
Yes, sir.
I think this was the perfect episode.
All right, buddy.
I like to call it the perfect episode, but that's just my biased opinion there.
I'm glad you liked it.
So, all right, guys. So, thank you for listening to this episode. We hope you took something from this. A lot of the dangers, but to watch out for. Prepare yourself. Knowledge is important. Knowledge is the key to life and key to this game, ladies and gentlemen. So, for Alex, for myself, for everyone else here at Deacon Hoover Real Estate Advisors and MACE Property Management, we thank you so much for tuning in, and we will see you next time.